Get over gold and silver because they have become risky. Yes, we can still buy them, but hear me out first before making your investment decision. Gold has given roughly 100% returns and silver roughly around 350%, all in just about a year. That alone makes it unreasonable to put fresh money into these assets right now. Now, some people who bought in the last 3 months are already sitting in losses. Gold has corrected 24% from its all time high, and silver has corrected a brutal 46% from its peak. And both have tried to recover after the fall. But the question is, are they actually valued now? I don't think so. And here's why. Including the recent run up, gold's 10-year returns stand at around 600%, roughly 60% per year on average. But that average is completely distorted by the last 2 years, where prices rose nearly 200%. If you take 2015 as the base year and look at the 8 years before 2014, gold's average returns were just 16% annually, which makes sense. Now, can anyone give me a solid explanation for why gold deserves to deliver 60% every single year going forward? There is not one. You need to understand patterns. Look at crude oil from January 2021 to March 2022, which is roughly 400 days. Crude prices rose by 160%. Then came 1400 days of decline, losing up to 50% of its value. And just in the last 3 weeks, crude has risen 30%. 30% in 21 days. That's the opportunity we look for. The volatility varies across asset classes, but the behavior is consistent. These assets can deliver extraordinary returns in a short window and then trap you in losses or flat ranges for years. That's the risk of sitting in gold and silver right now. Silver still has industrial utility, so we can wait for a deeper accumulation, deeper correction, and accumulate it then. But for now, patience is the play. Now, you might say people rush to save assets during wars and economic uncertainty, and you are absolutely right. Institutional players and central banks have been accumulating gold heavily over the past 2 years. But here's the real question: what if the war's impact has already been priced in? But the US Iran conflict just has just started now. तो अगर ये सब अगर कुछ लोग argue करेंगे, then they need to understand that institutional players do not react to wars. They anticipate that. They are the biggest players in the town. If a war is going to break out in 2026, they knew about it by 2025. If the next conflict is in 2030, they will be positioning themselves by 2080, 2028. This is not a conspiracy theory. This is how just power works. Think about it simply. Local leaders and local businessmen know each other. They sit together, eat together, drink together. They are usually go hand in hand. It's the same at the international level and just with the higher stakes. After the Epstein files, ये तो सब public हो गया that kings, world leaders, top businessmen, they were all in the same rooms. War does not just start out of nowhere. It is planned, calculated, and executed only when it is economically feasible. The US entered this conflict because it benefits them. Even if they don't achieve a full military victory, establishing dominance over Iran and the Middle East means retaining control over oil, and oil is everything. The US was losing its grip on the Middle East to China and maybe Russia. This war is how they reclaim it. So, where do you actually put your money? That is the question. Let me give you a quick take on each asset class. If we talk about crypto, Bitcoin, Ethereum, Solana, Binance, and a few solid projects are discounted, but they can still fall further because of shrinking money. You can start accumulating them, but like keep some capital aside. So if it falls, you can average it out. Second is crude oil. This was a great opportunity last week. I'm currently holding its 17th March contract and I'm already in profit. The second thing is natural gas. Now, about stocks, it depends upon your investing style. If you are a conservative investor who prefers staying within India, Look at Nifty Energy and Nifty Defense. Both are at significant discounts, both are directly in the line of demand. The defense sector globally is being pumped with money, and that's exactly what the defense lobby has been pushing for. Wars are ultimately about money. When countries go to war, defense companies win. If you have watched Family Man's latest season, you already understand this dynamic beautifully. So, here's my thesis. The US Iran conflict will set the benchmark for the next wave of global defense spending. Every country watching this conflict will be forced to reassess its military budget because war creates uncertainty. And nations are built on the promise of security, economic power, and border safety. And these are some of the parameter what keep countries alive. So every government will open its checkbook for defense. Who benefits? Defense companies, and right now they are sitting at a discount, having not moved much. The upside potential here is massive. And again, this is not a recommendation. I'm just a random guy on YouTube sharing my research, my thesis. If you follow random people on the internet and make your decisions based upon their whatever, you will eventually lose everything. Please consult a SEBI registered advisor before making your decision in the investment, and do your own research. It's very important. That's how you stick in the market. And if you are a progressive investor open to global markets, stay tuned for my next video where I'll break down my investment thesis on US, China, and Korean stocks. Bye bye.